weekend all. Ira Epstein with your metals market wrap up, and this is for the weekend edition of Friday and the 25th of October 2019. And remember, on the weekend edition we look at a monthly chart and then everything else is on a weekly chart. My silver report will come off our website this coming Monday, so that's the 5th day of it. Actually, the 5th day is today, comes off automatically by Monday. It might even be off tomorrow, I'm not sure. But I think that it's pretty interesting. Silver, while the last trade here, the settlement was 1792.60. The last trade was 1804 to 1805. Gold was about here, so was the copper market. Let's take a look at what we've got. When you look at a monthly chart, it's hard to argue that you're not in an uptrend. You are. And what the market had done is recently it had gotten itself a couple of months up and over the upper Bollinger Band, and you don't stay there more than 5% of the time. So getting a pullback very much in the cards, but as measured by the slow stochastic, the momentum is up, the bias is up, and the trend is up. You have higher lows, higher highs, and you had a breakout right here that is carried. And now the market is doing what I call running against the upper Bollinger Band. It's not bearish. We had on the weekly area chart of closes a down momentum from 1526.60 on a closing basis only, down to a low of 1482.70, and we've recovered off of that about $17, as you can see, with a settlement this week of $1499.50. When we come to a weekly bar chart, you're caught between this 1560 number, 1452 or so, back and forth in here. But when I put the swing line on, this is the chart without it. When you put the swing line on, a story develops. It's telling you that according to the swing line, which looks on a swing line at a previous week to decide should a line be drawn to the upside or downside. If you take my charting course, which you can find out on our website under the word education, we have some short videos that explains how that all works. But it's a lot of videos teaching you these techniques. It's telling you that the trend is what? Up. A definition of an uptrend is higher lows, higher highs. The whole purpose of the swing line is to tell you, are you trending up, down, or no trend at that moment? And then you filter this with key moving averages. One of them I use is the 18-week average, a 100-week, a 200-week. I have some others that I use as well, but for this video, why get it too complicated? The market this week got over 1511.20, so your trend is up. You entered a period where you finally got rid of this pattern of lower highs, lower lows. Did it last week when you came down, and now you've accelerated. So until you take out 1476.60 on the weekly chart, the trend is up, and even if you take that out, you've got pretty strong support against wherever that 18-week average is. Right now, that 18-week average is moving in the neighborhood of $5 or $6 at a shot. It's probably going to be near 1480 when we reopen on Sunday night. In terms of Bollinger Bands, they're not in play. That doesn't mean that they don't exist on the chart, but they're rather far away. You have to go to the upper number near the 1560 level to get to that one, and right now at 1392 to get to the lower one. So I don't call them in play. They're not right above or below the market where they're going to offer immediate resistance or support. Slow stochastics is momentum, and so that you've got a bit of divergence, and that makes sense. You had been thrusting down. Now the market's like turning a boat, a tanker. It gradually turns on a weekly chart, and that's what's trying to do right now. When we come to the ETF of GLD, it's validating what the futures have done. You've got the higher high, higher lows. It too had the momentum pointing down. It too is in the correction phase. What you don't want to see is 139.21 taken out. If you do that, you're back to square one. You'll probably be close to that 18-week average trying to figure out what to do. And by the way, even if you get through that, you would still have a higher high and lower low. It would not start a downtrend next week. When we look at GDX, the battleground's pretty well drawn. It's been here at the 18-week average of closes. Unlike the other two markets, lower highs, lower lows. This has been more bearish. The settlement was 27.74. When you close over the 18-week average, you say the bias is up, trend down, and momentum sort of flattening out now. Gold-silver ratio favoring silver again. You can see how it's breaking down. The lower the numbers go, the more silver Actually, the less silver you need to trade in against 1 ounce of gold, but the more valuable the silver is. And as you can see in silver, the market's flattened its momentum. Like the other metals, it was coming down. Now we've got the pattern higher lows, higher highs over the 18-week average. On this chart, what you don't want to take out is 1718, about 75 cents lower. As long as you don't, you could have in play here the 1895.70 level. Copper, you've had this strike in Chile. Mines are shutting down, ports are shutting down. So the rally that's been happening here is more of lack of supply than demand on the market. The pattern is what I call ugly. When you get this type of pattern where you had an outside week down and you take out that high, it's a bear trap. That's what I define. Now, the objective was the 18-week average, and it's carried higher. I don't know where the swing lines are. While I'm pointing them here, they're not as true as they look on that. In the platinum market, the challenge of the correction from the upper Bollinger Band to the 18-week average complete, trend back up, momentum trying to turn up, bias up, as long as you don't get back under last week's low, and that number was 879, you're in an uptrend in this market with support wherever that 18-week average is, and it'll be higher come Sunday night. The palladium market's the strongest of the metals. It's the wildest too, but it is the strongest. Look how it's just hanging at that upper Bollinger Band, running with upside momentum and an uptrend. And in the dollar index, you're fighting a battle now at the 18-week average. And are you trending? Not really. You have a higher high, lower lower, do you? Let me just show you, because I wanted to point something out. The high this week is 99.33. It looks on the chart like you made a higher high, and that's why I'm leaving this that way. I realized it when I did it today. You actually have lower highs, lower low. You're under the 18-week average. The trend is down. I want to remind you that my metal report will be off come Sunday or Monday, but I also want to bring up to you what I do in the mornings. I get up 4:35 in the morning, and I'm reading what's going on in Asia, what's going on in Europe, and then when I'm through with that, at about 5:30 to 5:50 in the morning, I start recording a video just for my subscribers. In it, I'm going to review 40 charts on futures, typically 3 to 5 on ETFs, and I'm going to throw out trade ideas. The purpose of me doing it that hour is so that it's in my subscribers' hands before the U.S. markets get up and cranking. Yeah, they're up all night, but the volume is thin, you know that, and then they're waiting for the U.S. government reports or European reports. Asia's already built into the market. In the morning, I'm able to say, buy here, sell there, do this. This is not for the long-term trader. This is not for the day trader. This is for that swing trader, the guy that's looking at these moves in between here. That's what I'm trying to work with you on. And in it, this is the exact sequence of the charts. There's going to be a lexicon on the side if you're on our website. Just click if you want to go to metals, it'll play. If you want to go to energies, do that. Or there's a slide bar on the bottom you can work with. And how do you get all this? Well, it's not free. In order to get this, there's a subscription cost. It starts off at $7.95 a month. Then it jumps to $15 and it's every 30 days. It includes, and it's going to include, my special reports. And you know, this week I put out one on the S&P, one on silver. I'm going to keep rolling these out. However, they are not going to be free to the public. They'll get to view them a few times, and then after that, if they want to view them, they'll be paying the equivalent of $2.50 for each view. But if you're a subscriber of any type on my services, or you have a funded trading account with us, that part, those special reports, will be included. So you decide if you like them, take a look at them this week. To find out more, go to our website under the word research, and everything will show for you right there, including those special reports. You have a good weekend. I'm Ira Epstein.